All of these overnight cues impact our own markets. Our research team is joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. No respite on Wall Street overnight, but what's the setup looking like back here?
Well, good morning, Harmas. Like you mentioned, absolutely no respite from the selling pressure. It's clearly a risk of sentiment that we are seeing across global equity markets. And that sentiment continued even in Monday's trading session, even on Wall Street. What was under pressure? The Nasdaq and S&P 500 individual stocks took a significant beating, but the Nasdaq was the one that bore the brunt of the selling pressure, down over 1%. Also remember, Nasdaq actually turned negative for 2025. Now, along with that, oil prices at the back of sanctions as far as Iran was concerned actually saw a move leg up high yesterday. Brent ended near the $74.8 a barrel mark. Now, coming to Indian markets, selling pressure intensified yesterday. FI selling yesterday was at a significantly higher number. Selling actually continued for the fifth straight session. What was the top sectoral laggard? Very surprisingly, yesterday, the Nifty IT, not only did the large caps, but even some of the mid-cap IT names yesterday saw significant selling pressure. And that actually has capped off what has been essentially a very weak market for typical defensives like FMCG, pharma, as well as IT. IT index, however, yesterday ended with some minor gains, and this was after 15 straight sessions of cuts, and the market breadth, even in the broad end of markets, was firmly in the grip of the bears or firmly in the grip of declines. Asian markets are quite weak. GIFT Nifty, however, is indicating a subdued, flattish start to our own markets today.
Indeed, Vivek, thanks a lot for that update. A 30-point downtick on the GIFT Nifty. The implied open is what is suggesting so far. But there are plenty of stocks that you need to keep on your radar this morning, and AkzoNobel is one of them. It's been in the news for the sale of its decorative paints business, the potential sale. But for now, the board has approved the sale of its powder coatings business to the parent entity. That will be done for around 2,073 crore. The R&D center will be sold for 70 crore rupees. They're going to seek shareholder approval for the same. And the powder coatings business accounted for almost around about 11% of the annual revenue in FY24. Now, Camlin Fine is another M&A news that has come in this morning, and they are going to acquire 100% stake in a company called WinPy. And firstly, they're going to invest around $3.3 million in the company through a subscription of the listed secured convertible bonds. And of course, they'll be executing a mandatory tender offer, what they call an open offer. That'll be done for around about 3.6 euros a share. Biocon also should be on your radar. That's because they have launched the Yesintec biosimilar in the US, which is used in the treatment of Crohn's disease, the ulcerative colitis, plaque psoriasis, and psoriatic arthritis. So multiple diseases. So that's a positive development for Biocon. The PSU banks and financial institutions should be on your radar because the government, as we mentioned in the headline as well, they have invited bids to appoint merchant bankers, lead managers for the stake sale. And this will be, once they are appointed, they will be done for a period of 3 years for PSU bank offer for sales, and the stake sale plan is currently in the preliminary stage. Now, the stocks that should be on your radar should be the high float PSU banks, right? The low float PSU banks, I beg your pardon. The Indian Overseas Bank, Central Bank of India, Punjab and Sindh Bank, New India Assurance, and even LIC should be on your radar. IREDA shareholders have approved raising 5,000 crores via QIP, and UPL step down subsidiaries have made some additional investments in their joint venture companies in Brazil. So keep these names on your radar. And lastly, Nigel joins in to wrap up this segment with cues from the F&O space. Nigel, good morning. Well, 22,500 now the key for the Nifty.
Well, that's right, Hormuz. Not too many positives in yesterday's trading session, but I just want to highlight a couple of factors. The Nifty Bank, that appears to be fighting for the bull. So if you pull up the intraday chart, you'll see the way that index recovered close to around 3 to 400 points from the low point of the day. The other point is the Nifty ended lower, but the VIX as well is cooling off. So that's a positive, actually, because normally when the markets are down close to around 250 points or thereabouts, the volatility index should spike up, which didn't happen in yesterday's trading session. So that's one positive that you're looking at. Next up, the FIs. They continued their shorting ways. In yesterday's trading session, they added close to around 11,000 short contracts, which takes the short position to around 85% or thereabouts. So they have been aggressively net short. And if you just pull up a chart, we're talking about them being aggressively net short at around 175,000 net short contracts. Take a look at that. In a matter of a week, that's gone up by nearly around 10%, from around 180,000 odd all the way to around 2 lakh contracts, or in an absolute value-wise, well, that's the highest that we have seen. So FI is aggressively net short. Normally, you will say that you expect some kind of a short covering bounce to play out with these kind of short positions. The problem is the kind of cash market selling that you're looking at. But if you look at the aggressive net short positions and you look at the PCR, which has come down to the lower end of the range, normally at around 0.65 or thereabouts, you do see a bit of a short covering bounce that plays out. So today, at some point of the day, I think the PCR will dip down to around that 0.65, 0.67 odd. And that would indicate that do not rule out a bit of a bounce that we'll see from the lows of the day. There appears as a strategy at place at around 22,600, which is the call as well as the put. It's known as a short straddle. You write both those two strikes, you pocket a premium of close to around 200 rupees, and you brace for a range of 200 plus 22,600 and 200 minus from 22,600. So that's the broad range that you're looking at. And finally, the Nifty Bank, since I just spoke about that, you'll want it to make a higher high. Last few trading sessions, it's been making a lower high. So that's going to be important. And the levels you're looking at, the crucial support zone should come up for you on the screen. Back to you.
Hoping for a higher high on the Nifty Bank, and that, of course, would brace on the Nifty as well. Nigel, thanks a lot for that.